Real families, real farms, real food. Welcome to Arizona Agriculture Connection with Maricopa County Farm Bureau. My name is Nicole Clements, Executive Director, and I'll be your host. Maricopa County Farm Bureau is the voice of agriculture in a community that thrives on the dichotomy of urban and rural agriculture operations. This podcast is a home for farmers, ranchers, food lovers, prospective agriculturalists, and those looking to connect the food on their plate with the farm that it came from. As we take an inside look at agriculture in Arizona, we will delve into topics like ag technology, policy, food preparation, and everything in between. You can find us on your favorite podcast platform with new episodes every Wednesday. Arizona Agriculture Connection is hosted by Maricopa County Farm Bureau and sponsored by Paloma Ready Mix and Materials, a proud supporter of agriculture and our communities. Be sure to subscribe and share your favorite episodes with your friends. For more interactions, follow us on social media, Facebook, Instagram, and LinkedIn at Maricopa County FB. Now let's discover some Arizona agriculture. Welcome back, Arizona Aggies, to another edition of Arizona Agriculture Connection. I'm very excited to have my industry friend, Brinton Colburn, here from Foothills Bank. So he is an agriculture industry specialist with the bank, and thanks for taking the time today. Really appreciate it.
Super excited.
Awesome. So kind of give us a little backstory. How did you get to the banking world from agriculture?
Yeah, so actually I grew up here in Gilbert when it was all farms. That's my claim to fame. And I went to Gilbert High, but I started working in banking at Wells Fargo because they had tuition reimbursement. And I went to ASU. I went to the Morrison School of Agribusiness. Honestly, though, I went out of convenience. I loved the East Campus. I loved that I didn't pay for parking. I didn't have to fight traffic, and I was able to work and go to school, and Wells Fargo just reimbursed my tuition on there as I went through the process. And when I graduated, I then got accepted into this banking school, the College of Commercial Credit, that Wells Fargo put on, and it was to help individuals go into commercial lending, and it was like a 2-year program. And when you graduate, you kind of get poached from other banks because they didn't have this intense of a program. Well, lucky me, I graduated college and underwriting college right in that 2009 era when the economy was just in the dump. And there was not really any commercial lending happening. But Wells had invested a ton in me, so they weren't going to get rid of me, obviously. And other banks weren't poaching because there was no lending. And so my kind of regional president, she said, hey, I was in Minnesota finishing up this school, and she called and she said, look, we don't have a spot in commercial, but we have a spot in ag lending. It's in downtown Mesa. She goes, you might know a lot of the growers actually just from growing up here. But she goes, there's an analyst position, and if you start there, you can learn to underwrite agriculture. And she said, if you can underwrite that, you can underwrite anything because it's so different, so much more complex, and so much harder. She goes, so when the economy kicks up, you can go back into commercial. And I said, well, it's better than just kind of sitting around doing nothing. So I went in as an analyst there and gained a big love for ag lending. I did know a lot of the growers. I met many more, obviously, that I didn't know. And I was there, for 15 years at Wells Fargo before I jumped over to Foothills Bank, which is a smaller regional bank that started in Yuma, Arizona, and they kind of brought me back in to help re-energize or bring back to life their ag lending program because it started as an ag bank, and commercial is just a more popular, familiar route of lending with more opportunities. So they brought me back in to do so. That's how I went from no interest or knowledge in banking to then ag and then to being an ag lender. So
the ag industry just kind of got a hold of you and didn't let go.
Exactly. And I get offered all the time, even at the bank, they're like, you can do commercial stuff if you want. And at Wells Fargo, I played with some commercial and built really good relationships, but not to be cheesy because we are in ag, but it feels really good to work in the ag industry. I feel that I'm helping businesses and families more than the word business, families that are contributing to what we eat, what we wear. I could list all the cliches, but you mean it. You know what I mean?
So with that, and coming not from an agriculture background, How was it intimidating for you to kind of set foot in that arena?
It was. It was. I had some great mentors that had been in the industry in ag lending for 20 plus years. And they really broke it down to me. And by break it down, they sat me down and they said, look, you're going to be an analyst for a minimum 2 years because you have to learn this before you can go out in the fields and successfully say, oh, we can do this, or we can't do this, or here's ways we can look at it. And they also introduced me to quite a few people, but they taught me the important things, that you have to be in it and you have to be invested. You have to understand that farmers and ranchers are at the mercy of commodity prices and weather, both of which they can't control. And that's actually one of the reasons I moved to Foothills, was because that is in our credit policy, meaning our credit policy understands that farmers and ranchers cannot control everything. It's very relationship based. You have to be in it through the ups and the downs. And so it was intimidating to break into that, because in banking, often someone asks, well, if you'd like the produce world in Yuma, and they say, well, what if someone else comes in and starts trying to grow produce? Well, you can't. I mean, it's decades to even get a small contract. Well, the same is for ag lending. It's hard to just walk in off the street and say, I'm the new ag lender in town, let's do this. They're going to be like, no. So
Yeah, there's, I think, just a handful of lenders that when you say ag lending that come to mind. And, some of them are regional, like Foothills, that I'd never heard of that until I was in Arizona. And with that and the complications that ag lending brings, how do you maintain some of those relationships and keep these, good working relationships through all of those ups and downs that we see on a constant basis?
Yeah, it's really educating the higher ups, and the higher ups meaning my management team and my credit officers. Fortunately, Foothills is very open and in saying, we're leaning on you to guide us and to teach us. But more important, our bank, because Foothills is a division of Glacier Bank, and Glacier has a very large ag portfolio, and Glacier helps write that credit policy. And they have senior credit officers throughout the system that are very knowledgeable in ag. And so it's easy for me to be with a bank that understands ag. It's easier when you're working with a senior credit officer team or individual that says, we know that ag is up and down. In fact, Glacier's chief credit officer, his family still ranches in the Prescott area. And that was one of the reasons I moved over, because as not just myself, but all the other individuals in ag lending, there's not many in the state, like you said, outside influence, when they get bought from banks outside of Arizona, we are different than everywhere else in the nation. And I know we all know that, but it's the same in ag. They're blown away at we can cut hay this many times. They don't think that our ranchers can have a birth rate that we do, right? They're blown away that we can raise cattle in the desert. That doesn't make sense to them. And so having a credit officer that still ranches, even though he's not, his family is actively, and he lived here, and he lived in Yuma, and he lived in the central part of the state, that was a big relief for me, right? I have a team that understands Arizona ag. And while I loved, my previous employer, once that Midwest influence comes in, it starts to ruin that policy. They don't see things the same. We're not growing the same crops they're growing. We're not storing them in silos like they're storing them. It's just night and day different. So part of it is teaching my team. Part of it is working with an organization that takes time to understand what makes our state different. In Glacier, they keep all of their different divisions. I don't recall now how many we're at, like 15 to 18 divisions in each state. And they keep them independent for a reason, because every region, every state is different and independent. It can't be blanketed with the same thing. So we all have different strengths and weaknesses in our areas. And that is one of the reasons I moved over to this bank.
As someone who grew up in the Midwest and lived there for 30 some odd years, it is so incredibly different. And to think about just in the time that I've been here and, the learning that I've done, and I'm in agriculture.
Right.
So I can't imagine, being outside and trying to just really grasp the whole industry and figure out how to
Yeah.
blend on it. Yeah, that's a tall ask.
It's something you can't just walk into. You have to have the mentors, the team to guide you through it. Just even here, like you're saying, it takes that long to learn all of this and visits to these farms or these regions of the state to kind of see what makes it so uniquely different.
Yeah. So how long have you been doing ag lending now?
Yeah. So ag lending, I started in 2009. So what are we at? Going on 17 years now, which is crazy everyone always says that, right? I've been 17 years. I've been doing this so long. But yeah, 17 years, strictly ag lending. So
You feel like you're the expert yet?
honestly, I feel very confident in my knowledge. I do. And there's not many of us in the ag space anymore. The generation that was my mentors are all retired. The peers that are out there at quote unquote competitor banks, I don't view it that way. I view we're all just trying to help the growers in the state. I know every one of them because there's only like 8 or 9 of us, and we have to make sure the state continues to farm and ranch. So yeah, I would definitely humbly state that I feel like I'm an expert now in my field.
And I think that's part of that relationship too, because farmers and ranchers, they're relying on you to be that expert voice to help them. They don't want to sit down and think about all that kind of stuff. Like they want to ensure that they're trusting that to you. And so that is, they can be very confident in the ability.
It's funny you said that about that trusting or relying on that because, when I send out my email, if I'm sending out a loan package, like a new request, I always put in the bottom, call me if you have any questions. You do what you do. I do what I do. And we can, get it done together on there pretty easily. But because it is overwhelming, it's chaotic and it's a lot. And some individuals have been at the same place for 20 years. So it's kind of an autopilot ordeal. And when they have to move over to a new bank, there's steps and processes that, it throws them off a little bit. So
when we think about, like, we've seen a lot of turmoil in the markets and the news and everything that's happening kind of at a federal level, does any of that impact what you guys do and how that you write some of these loans?
Yeah, so obviously commodity prices are impacted, whether we want to directly tie them to tariffs, or we want to directly tie them to policy that's put into place, that all impacts it, makes a difference. And of course, we benefit from insurance or bills that are passed that compensate growers and farmers. One thing I always enjoy to point out, not enjoy, but one thing I think is important to point out is Arizona, while it does benefit from insurance and bills, we do not rely on government payments to the same weight that other states do. While it's material and can help make or break a credit, or if that grower is going to be able to farm the next year, it's not like other states where they're just throwing seed down. They're like, well, let's see if it rains, right? And for the first time this year, we were actually really impacted by decisions made at the federal level. One of the reasons I moved to Foothills is we are a preferred lender with FSA. So FSA, in case anyone doesn't know, is essentially in the ag lending space the same as SBA for commercial lending. It allows a bank to lend on terms they normally wouldn't because we have a guarantee from FSA that if something doesn't happen, they'll help repay a portion of that loan. And that allows us to help younger farmers and ranchers. It allows us to help maybe farmers and ranchers that had a couple years that weren't good because of commodity prices, and allows us to feel more confident in our lending practices. And because we're a preferred lender, I basically just underwrite, and then FSA does their due diligence, but they kind of just stamp an approval on it and send it over. And that's something that I was excited about at Foothills. Well, this was the first year that things that happened in the government impact us, where I sent a deal on, and the FSA president, who is great and definitely does so much work, the team here does, he called and he said, well, this now has to go to Doge review. And I was like, what? He goes, yeah, we found out through a news article. He's like, and we don't know how long it's going to take. Well, when a customer is waiting for that line that I just approved, and then we wait for FSA to do their part of approval, and now it's just sitting in this Doge limbo, right? And then also when the government shut down, those FSA offices were gone and shut down. And we had loans that were in process that were trying to help farmers and ranchers that I had two just at the, this last shutdown. Well, other banks have deals too, and FSA had their own deals. And I think that was the first time we've really been just materially punched pretty hard on it. Now that obviously only impacts a smaller network or community that are relying on those loans, but that was a wild little experience where we're all kind of in limbo, like what happens now? You know what I mean? I didn't dive into detail with them, but you could hear the excitement when they were back and working and helping customers. They just share the same love for helping, farmers and ranchers throughout the state also.
You don't have that background in agriculture, but you have the passion for it. And so if you did, or if you kind of grew up in that world and you had to step away from ag and get into an industry, like, why do you think ag lending would be a good step for that, or a way to stay connected in the industry?
Because sounds cheesy, but you're boots on the ground. You're out on the farm, you're touring the farm, you're seeing the farm, you're seeing what they're growing, you're working with the customer, you're working closely with their financial statements. And by that, I mean, you're looking through their budget, you're talking about what they're going to grow, why they're going to grow it, who they're growing it with, right? I mean, one farmer deals with fuel, fertilizer, chemical, seed, broker, gin, harvester. There's so many layers of relationships. And so if there's not a spot for you on the farm, or you don't want to be on the farm or in the ranch, or, you don't want to be out walking in the fields 24/7, ag lending allows you to keep a pulse check. It allows you to be at the events. It allows you to hear what's happening. And so you're just as integral to the operation as their fertilizer guy is, or as important as their insurance, team is. So you have to be right there with them to make sure everything's operating. And it's one of the reasons I love ag is you really are, it really is a relationship. You get to know them, their family. You are invested in what's going on because, as we mentioned, if commodity prices are down, it doesn't mean they're a bad farmer. And you have to go back to your team and explain, this wasn't because this guy did something wrong or gal did something wrong. It's because the prices weren't there. We know that. It's on a national level. There's nothing you could do about it. And so you have to work through that next phase with them. And it allows you to just be right there in the emotion of all of it too.
Is that something that you maybe keep up with? Like, not just the markets, but like I was speaking to citrus growers, and they've been extremely impacted by imports that we're receiving from other countries. And so that's essentially tanked their whole market. Yeah. And so how do you keep up with all of that? Do you try to stay on top of it, or? I
do. It's overwhelming, honestly, because Arizona is its own niche state. Well, Arizona and, our border states and things, but everything impacts everything, right? It's all, if someone's importing something, it makes you think, well, what are they going to import next, right? So I have a very few things that I subscribe to, but I am grateful for the contacts and relationships that I have in ag. So I'm always on the phone and I'm talking to growers in different parts of the state constantly. And then within my own bank, I listen in on credit calls. So I'm hearing what people in Montana or Wyoming or Washington, what they're talking about apples, what they're talking about cattle, what they're talking about grains in their respective states as well. So if I didn't have that network of all those, I'd probably have more subscriptions or listen to more things. But I really just try to hone in on Arizona, California, of course, any of the 7 basin states that the Colorado River's in, because they all tie together in what we're doing.
So if you were at a career fair or maybe doing some hiring, what organizations or pathways would you say would be a good option for people who are looking to break into this career?
First and foremost, I will start because it's banking. It's an industry standard. You have to have a degree. So whether it's in process or you have it, a bank does tuition, not just the bank I was at. I think all banks pretty much do that. So just know if you are interested in this and you are going to school, look to start as at a bank right now. Start as a teller, start as a banker, work those hours that are required so that you can get that tuition reimbursement. But if you want to get into the ag lending space, you have to find that community bank. You have to find an existing lender, and you have to hope that they have an opportunity to be an analyst. A credit analyst, just so you know, is in the banking space is often an individual who is, I always brag, they're much smarter than I am, but they take all of the financial information, the tax returns, the balance sheets, personal financial statements, and they spread them. Spreading is a fancy term for just putting them all into the ratios that are required to underwrite. So they're the ones that stare at the deal, they underwrite the deal, they put it together, and they send it to us as a commercial lender, and they say, here it is, here's the numbers, here's what the numbers say. And then we as a commercial lender, we get to come in and put the qualitative information, right? They're giving us the quantitative, we come in with the qualitative, and we give answers such as, yes, this customer benefited from a big, beautiful bill payment that gave them more revenue this year. Or this customer has seed contracts, which is an advantage compared to their other growers. Or this customer had a hailstorm that hit. So while they did have a loss, they are going to get insurance money, right? We tell the story of what's really happening on the farm. So the numbers tell exactly how it is. There's no sugarcoating it. And that's what outside auditors come in and look at from, when they're auditing banks. And the banker brings in the qualitative part of it. I'm the one that's been out on the field. I've been out with the grower. I've been talking to growers in their area, so I know what storms have been through there. I remember the storms that came through, right? It's hard for someone to make up these things. And so a credit analyst allows you to learn what the bank will and won't do when it comes to underwriting. It helps you understand the bank's credit policy so you're not wasting farmers' time when you're out in the field or when you're helping them, or that you as a lender are not bringing in things that will never go through. And I had a manager that when he sat me down in that ag lending, he said, you're going to do this for 2 years. And as I said, I was kind of deflated. I was like, really? And now I tell everyone it's the best thing. Anyone that comes in, I say, you need to be an analyst. And you could start being an analyst in a commercial lending environment and message or go into it and message the ag team and say, hey, I want to help. Let me spread, let me input this financial information into the system. Let me start learning. And that's available. For example, we have an analyst right now that she is in Prescott area, her family ranches, and she's like, look, I just want to do what you guys do. I know that there's not a need for an additional position. How can I start helping? And so we've just started sending things her way, and then I get on the phone and we go over it together and we talk about what it is. And so to me, in the ag lending space, because there is not many opportunities in ag lending, the best way is to find a bank that has an ag program, be very upfront, say, hey, I'm going to take whatever position, but this is where I want to be. Because odds are they're going to welcome you and they're going to need you, because there isn't, ag lending, this was a decade ago stat, but they were saying the average age of ag lenders was 66. This was at the American Ag Bankers Association meeting. And they said the average age of the farmer is equally the same, right? There's a huge age gap from the grower, and it's like then their kids didn't get involved and that their grandkids are. Well, it's the same in ag lending, right? There's not many getting into it, but there is still an important need. There's just not an abundance of openings available because a lot of banks get purchased and they kind of end their ag program. And then in 3 years, that bank decides to rejuvenate it. You know what I mean? So that was kind of a long drawn out answer, but that's how I would go about. If you want to get into ag lending, that's how you have to do it.
And that's kind of the whole point of this Careers in Ag series, is because we talk a lot about how, like 1.7% of Americans are farmers and ranchers, but there's over 10% of Americans that work in agriculture. And so we've got, over 8% of our country's population that need to be working in these critical roles that support that 1.7% that is actually out there doing the work, but they can't do it without all of these other partners as well. And so trying to maybe something that I've always said to employees and interns is like, I can teach you anything you want to know about agriculture, about how to talk to people, but I can't teach you the passion, right? And if you're passionate about it, it's going to come easier to you anyway, and you're going to be excited to wake up and do this job. And just at the end of the day, makes for a better time for all.
Yeah, you kind of sparked something or a thought in that I never thought of because I've never been asked that question of, how do I really get into this ag lending? But if you really are passionate and you love numbers and you know that you want to get into ag lending, you can do it at any point in your life, but if you're just out of school or you're getting scholarship offers somewhere else for school, one thing that Arizona has is we could dive into the whole banking. This is a banking industry thing more than it is ag. But, Arizona doesn't have a lot of little regional banks. And that there's a reason for that we won't get into in banking. But the rest of the country, if you go east of probably Colorado and over, there's tons of regional banks and there's tons of ag banks. I mean, in other states, they'll have in one downtown area with a population of 5,000, they'll have 4 ag banks. They'll have one on each corner, all competitor banks, because there is still so much agriculture in those communities. So if you have an opportunity to go and intern or be an analyst and learn, and you're fresh out of college and you have nothing keeping you here, go learn in another state for 2 years, ag lending. There's way more banks and opportunities out there, and come back to Arizona. You will come back as an expert, a professional. You'll more easily get picked up, right? If you go somewhere else, say I'm an ag lender, my family lives in Yuma. I grew up in Yuma, but I moved to Nebraska to learn ag lending. Well, as an ag bank, I'm going to say, yeah, you know everyone in Yuma already, or you know everyone in Maricopa already, or, ranching families up north. I'm going to welcome you back right away, and you've got the experience. So I would say if you have the opportunity or the ability to move and join maybe a smaller ag bank where there's more positions, you can go online. I'm sure there's 100 ag banks hiring right now. Then do it and learn and come back to Arizona, and you will probably get paid more because you have an advantage that someone moving from outside doesn't. There's a lot of ag lenders that have moved from other states because they want to live in Arizona, but it takes them years to get momentum. Well, if you can come in as an individual in this community already and come back with ag lending experience, huge advantage.
Absolutely. This would be the first question. Like if we were having this conversation with a group of high schoolers or even college students, the one question that I know that they would ask is, do you have to be good at math?
When I was in my accounting class, which my professor was actually a childhood friend, it was his parent, their dad, and he always laughed and he would say, calculus is just the sifting program to see who's serious or not. And I would say the answer is you do not have to be good at math because our systems do the calculations. You do have to be good at understanding what the numbers are telling you, though. And I don't think that means you have to be good at math. It just means you have to understand commodity prices. You have to understand planting schedules. You have to understand why they planted them, what else was going on at that time. Because you have to be able to explain to approvers, you have to be able to explain to outside auditors why you did this credit. Why did you feel comfortable underwriting this? And you have to defend it. If the numbers say negative things, why are we comfortable giving this person more money? It's not so much that the bank doesn't trust the grower. It's because when the outside auditors come in, they say, this is not sound lending. This is not prudent, right? So I think a lot of people forget that really banks understand ag and they want to be a part of it. But if you can't explain what's happening or why there is a negative, then the bank gets in big trouble by those that are kind of checking those books, right? So do you have to be good at math? You don't, because this is a relationship. More of what I do is understanding the grower, their farm, their crops, what went well, what went bad, what's not working, what are suggestions to work, more than it is understanding how to do a current ratio, working capital, debt coverage ratio. Once you figure out that pattern of math, it's very simplistic, and the systems help you spit out that information. You just have to be able to understand what it means and why it means that. So more than calculus or, any of those specifics, business financial statements, accounting at a very low level, being able to look at a balance sheet, being able to look at a profit and loss, being able to understand what that's telling you or where those numbers are coming from is more important than understanding math.
More analysis than,
Correct.
Yeah. So I want to take a step back really quick because that kind of sparked something else. So you talk about it's your job to tell the story, right? Take the math and share the story and make it make sense. And then we talk about how others see ag as unsafe lending. And a lot of people maybe don't understand why farmers and ranchers operate as in debt as they do. Can you speak to that a little bit and kind of explain that relationship and why we are lending to quote unquote unsafe operations?
Yeah. So, what's funny is as an ag lender, there's one thing that we hear all the time, and I could present a credit to a committee every week and they'll get on and say the same thing. I don't understand ag. This is different. It's not really. Okay, here's an example, and you'll see where I'm going. In the world of commercial lending, for the most part, I feel, in my experience, and I had great relationships with commercial borrowers, and commercial, I mean manufacturing, I'm just random things. I had great relationships, but they're much more private. So they don't talk about who they bank with. They don't talk about their lending. They don't talk about it as often. When I go out with farmers and ranchers, I'm going to breakfast. I go to dinner. When we're passing on the canal road, we stop and we talk. They introduce me as their banker. I mean, I'm in the truck with them. I'm at events with them. I'm honored. I'm grateful. Now, obviously, banks are required to, keep privacy and things. And so if the customer introduces us, great. We don't share info. We don't talk info. We don't say, I bank so-and-so, right? Unless that person's clearly said, no, go tell them, But in commercial, it's secretive. You only meet at their office. They don't boast about you. They don't brag about you. Commercial world borrows equally as much as ag for the same purposes. The difference is a manufacturer is making, I helped an individual that was making missile and plane parts, right? A giant manufacturing place. They're lending just as much. They're buying $2 million pieces of equipment. They have lines of credit to buy materials to make the parts to sell. Well, a farmer is buying a $2 million tractor, a $1 million tractor. I give them an operating line to buy the inputs necessary to grow a crop to sell it, right? It's the same thing. It's just a growing crop instead of something you're making. So, and you can redirect me back to the question if I'm not answering it, but the difference in ag lending is we're much more open in the, I'm going to use a cheesy word, in the symbiotic relationship between ag lender and farmer. We have to work together. Well, commercial world's the same way. They just like to act like they don't, or they don't talk about it, or they try to think they don't. But guess what? A real estate loan in the commercial world is essentially the same loan to values as it is in the ag world. Equipment debt is the same in the commercial world as it is in the ag world. So I think I got excited to share that because every time I go on a committee call, it doesn't matter what bank, they're always like, well, this is just so different. I'm like, it's not. It's the same thing. It's just alive instead of not. Really what the major difference is if you have a $4 million commercial operation, like company, they've got the owner, they've got a bookkeeper, they've got office staff, they've got individuals preparing more detailed financial statements. If you've got a $4 million farming operation, it's the farmer or rancher, man or woman, their spouse is doing the bookkeeping maybe, and then they have 3 individuals that have worked for them for 20 years and some other help, right? They don't have an office. They don't have a building. All their money is going into the field. It's going into the farm. It's going to their team. Where this guy, the commercial guy, is buying a building and he's paying a a bookkeeper. Right. So, a farm that is a $40 million in revenue kind of farm, they have a bookkeeper. They have this. But everything that's in the commercial world, all these commercial buildings that we see, they're doing 3 to 10 million a year. They have so much more technology available to them to help their financial statements look prettier, where a farmer is still writing out his balance sheet. So really in the ag lending, the big difference is you have to be able to help the growers make sure they're putting putting enough detailed information on their balance sheets so that we can tell the story, right? If you have a line of credit and it's got $1 million advanced on it, well, when I go to underwrite and I present it, I say, well, here's $1 million line of credit. It's fully advanced right now. Everyone's going to go, well, why is it advanced? Oh, that's because he grew cotton and he's not getting paid on it until March. But see, we've got 1.5 million coming in from cotton that's going to pay this off. That's just the difference, is really being able to explain why there's money outstanding. How is it getting repaid? How does that help us go into the next year? So that's where it comes to that explaining. And so I think the biggest difference or the hindrance to ag lending isn't so much what we're growing, is the quality of the financial statements. And so I tell all my growers, if the more detailed you get on this, the easier it is for me to underwrite and send through the process. And that's why I said at the beginning of this conversation, you do what you do. You call me with any questions because I will do what I do. That's also why farmers and ranchers work so well with their bankers, is because we're always asking questions. We're helping get more and help them understand what they're putting together on that.
Yeah. I was just having that conversation yesterday, actually, about a farmer's never just a farmer, right? They're a farmer. They're a logistics ninja, a meteorologist, an amateur vet. They're all of these things, all in one. And you could be all of those things in one day, just depending on the day.
And I still need your financial statement.
Yeah, exactly.
Right? Like, you want a line? I got to have them. And they are doing all these other steps where, again, a commercial company of the same revenue size. So this is any farmers or ranchers that are listening right now. It's important that you know that you're doing way more than the individual. You'll see a commercial operation and they bought this new building. You're like, buy that building. You're doing the same revenue. It's just the money and allocation is different, right? It's all going back into the crops, and this guy's, putting it into a building, and you're putting it into land. And so.
And part of that, like the uncertainty, weather, events, things like that. And those who can rely on maybe like a crop insurance payout for some of that stuff, how does, like where we're sitting right now, like we got the one big beautiful bill that provided some provisions, but we still don't have an updated farm bill. So how does that impact kind of what you guys are looking at for lending on operations that would be maybe impacted by something like that?
Yeah, without getting too detailed, let's pretend that you're growing cotton and your cotton is going to be, 3 bales. And then you got a seed contract, but those contracts aren't always guaranteed. And then you're also going to get gin rebate money, but you don't really know. I mean, it's all depend on yields of what's going through the gin. And then you're expecting to get money from, we'll just say the big beautiful bill, right? Back. The thing that what we're lending on as a bank is, what's that crop really going to produce? What's the crop itself going to produce? To me, everything else is icing on the cake. If they can operate on what those yields are, which could be considered unfair or disadvantage when commodity prices are low. But that's the reality. We have to operate and pretend that we're not going to get any of that stuff. If we do get it, our balance sheets are now in a better position, because that's just cash that came in to pay off debt, to buoy up the balance sheet, to allow them to grow, go into the next year, allow them to pay off or make improvements where they need. And so often a budget will have all those items included, and they'll say, well, I need a bigger line because look how much revenue I have coming in. But those aren't guaranteed. And while they are probably going to happen, We don't know that for sure. And so it's best to operate, on the side of caution, because if you don't get them, now you're upside down on your line. Now we have to figure out, how do we get you out of this mess? Where if we underwrite prudently or to credit policy, and again, most banks have the same policy. Like Glacier didn't make it up, right? It comes out of a big area and we all decide, we're all the same. And it's, how do we get out of that? Well, to me, those extra items, that's how growers get out of a bad, low commodity price year. And if we're not upside down at the start and they get all that money, man, they're off to the races for the next year, right? They have a stronger working capital position. They have more money to operate their business on and less reliance on debt. So, it will frustrate some growers when they'll say, well, you didn't include all these. I said, well, I did include it, but that's just icing on the cake for you, right? That helps if you don't get it, or if commodity prices dip lower or something happens. We know what this crop's actually going to do. There's no guessing on it, right? So, we're always watching commodity prices. We're always hoping they go up. We're always wishing we didn't sell as soon as we did. But the reality is the sooner you can sell and revolve or pay down the line for any institution, the better you're going to be, right? To me, it's better to move and pay the line down and not pay as much interest, because that allows the bank to come in and give you funds for next year, or it's easier for the bank to do that. So
I don't think it's ever been explained to me quite that way. Obviously, I've understood it, but that was really great. This just such a wealth of information from you today. So thank you.
Thank you. I appreciate the opportunity to chat about it. It is such a weird niche.
Absolutely.
But it's something that's so integral to everyone in our industry, right? Without insurance, lending doesn't happen. Without insurance, growers don't benefit from times of catastrophe or something like that, right? And so we all have to work together. And I think the more we all know, the better we can figure things out and make sure the state continues to prioritize and focus on agriculture.
Agreed. I think it was all such a great conversation. Thank you so much for being here.
I appreciate it. It was a lot of fun.
Good. I'm glad. All right. Well, that is a wrap on this week's episode. Thank you, Brinton, for joining us. We really appreciate it. And if you're interested in a career in ag lending, I could probably pass out his email.
Yeah. Please reach out. Let me know. I know all the banks around town and can help give any guidance on there. So
we can clutter his inbox.
Yes.
All right. Well, that wraps it up for this week. So catch us next week for an updated ag report. Thank you for tuning in today. And remember, Farm Bureau has a place for you. Be sure to subscribe, leave a review, and share this episode with your friends on socials. You can also visit our website, maricopacountyfb.org, for more information and to submit a topic you want to learn about. Remember to tune in every Wednesday wherever you listen to podcasts. A huge thank you to Paloma Ready Mixing Materials for supporting our agriculture producers and this podcast. Maricopa County Farm Bureau, bringing you the stories of real families, real farms, and real food. I'm Nicole Clements, signing off. Catch you next week.